talk to us about this local market performance because, yeah, considering we had BHP down by 2.3%, Rio Tinto off by 2% as well, not too shabby.
It was a pretty good day for the Australian share market, Nadine, and as you mentioned, we did see those concerns around global growth because of the intensifying trade pressures between the US and China, and that was a major impact in terms of markets on Friday. We saw commodity prices falling quite heavily. Copper prices were down more than 2%, gold prices were down. We also saw oil prices down. So unsurprisingly, it was the materials and the energy parts of our market which were weighing, but they were balanced out, more than balanced out by the banks, which have been down for so long. And in fact, if you have a look at valuations in the banking space, they not only have seen valuations below longer term averages, but also the dividend yields are much higher than those longer term averages as well, which is what you'd expect when the share price falls so much. So the bank's very much in favour again. And the Aussie market looks like it's going to be a positive end. And that means we did see a number of stocks reaching all-time record highs. And that propelled the index higher. Some big stocks like Macquarie Group, the ASX, as well as Wesfarmers, all hitting all-time record highs, and then some smaller stocks as well, like Xero, as well as GUD Holdings. So all in all, pretty positive way to start off the week. And also, I guess
I think we're a bit of a day early, but not really if we take a look at the share price performance of Telstra. So had a great run last week, Julie, in the wake of that JP Morgan upgrade that came through and ahead of the Investor Day, which is Wednesday. But today turning tail, down by 2.3%. So that note from JP Morgan, the big expectation for some sort of root and branch type strategy update coming on Wednesday. Not enough to maintain the momentum. Why?
Look, this one's really dividing the market. Telstra has its strategy day on Wednesday, and there's going to be a lot of pressure in terms of management. And that's because we know what's happening at Telstra. We know that there's rising competition, and that downward pressure on earnings means there's also pressure on the dividends. So, look, I think the division in terms of the market comes down to how much you can cost out here and what impact that's going to have in terms of earnings and the extent to the dividend cut that's coming. So, really, this strategy day is going to be all about how much cost cutting, the dividend fall, how much dividend. And look, we saw JP Morgan on Friday, as you mentioned, Nadine, coming out with that bullish note, and that was around Telstra expecting to see a lift to cost savings of up to $1 billion. But look, Citi at the same time have come out with a sell, and if you have a look at the dividend of Telstra from 31 cents to 22 cents and now 14 cents, there's no doubt that this is a company with earnings under pressure. And whenever you see that, the first stage tends to be how much you can cost out and how much fat you can cut. But that, of course, is temporary, and at some stage you need to see a turnaround in the boat in terms of revenue to turn around the business, and hopefully 5G will be a catalyst there, but no doubt that investors will be looking for that catalyst as well as a temporary stay which will be around cost cutting.